Welcome to Clarity Financial's weekly Underbelly podcast, where we dig deep, discussing financial topics few advisors dare to tackle, and share thought leaders from the world of finance, covering important topics like Social Security, Medicare, retirement planning, and asset protection, providing you with personal finance ideas, not just to save you money, but make you money. Now, the Underbelly podcast.
Giving you the air.
And arming you with money truth. And good afternoon. I'm Brent Clanton, executive producer, along with Richard Rosso, our director of financial planning, and in the studio, Byron Kidder, a specialist in professional guidance, improving business growth, communication, project management, and customer relations, as well as personal improvement. And if you think that's a wide-ranging space, you're right.
You're right.
So Byron's book, It's All About Everything, comes in a 26-volume set you can order online for just $29.99 a month. Not.
He wishes.
But it sounds good.
Hey, listen, the book is worth $29.99 a
That's
month.
right.
But there's so much advice in the book, and it's so much common sense in the book. Well, speaking of something that's far from common sense, and we welcome you here to our podcast today, it's the stock market giving us the heebie-jeebies. I didn't think I'd use that again. So we are seeing the Dow obviously down 127 points, but I will tell you that is a vast improvement because it's down 135 points. S&P has been fluttering with what we call official correction territory, which is 10% off the recent high. Now, we'll keep this in mind. The 10-year Treasury that had hit a high not too long ago at 3.25% has pulled back to 3.089%. Our analysis here, especially Jesse Colombo, looks at the S&P. We are actually at the point right now where we should get a bounce in the S&P 500. So let's see how that goes. We got a little bit of a bounce yesterday, but I will tell you it was a non-event. So we have to tell everyone to keep your cool, okay? Corrections happen more often than not. What we saw last year with very little, if any, volatility and the market closing higher each month was highly unusual. This, I will tell everybody, is how markets react. So keep your cool, everybody, and read Lance's newsletter tomorrow. A lot of information about what we're doing here at Clarity and what you should be doing with your 401k. And thanks, Byron. I appreciate you coming in. You got any comments? Got any comments on the market there, buddy?
You know what? I had somebody send me a friend of mine, right?
Yeah.
You know, I used to trade quite a bit.
Yeah,
day
you're a
trade
big trader.
and
Yeah.
invest, And so somebody sent me something. A friend of mine said, I'm down like 7% in my 401k. I said, well, you must have invested pretty recently then, you know?
Yeah.
Because the market's up, what, 30% or whatever it is over
we've
over
had
the
a bull
last.
market for so long, right?
And
I
so
mean,
they
and last
did.
year was great.
They started investing like last October, which
Okay.
is probably what, I don't know, you know,
No, but
maybe
you're
the
right,
peak
but
or
you're
where
maybe-
it was at. So I said that's basically what happened to you is you just guys basically gotten in at the top.
Right.
So
That's right. And that's what people do. And listen, whatever your time frame is, yes, I understand it's disconcerting. It's doesn't feel good. I totally get understanding how that works, right?
Yep.
However, that's what happens. You never know. You're never going to be happy when you first enter the market. You're going to
good
time
point.
it wrong. But a lot of people get in late. Like they get in after the fever. No one wants to touch stocks, unfortunately, when they come down. And that's just how
it's
we...
like the Bitcoin fever. You know, I actually
Boy,
made
that
money
was
on that
painful.
deal. I got in right when it shot up for about 2 weeks after that, and then got out.
Yeah.
But,
No, but
everybody's feeling the pain right now.
Yeah, a lot of people that got in at 25,000, absolutely so overall. So again, Byron did write the book. It's all about everything, and I think we're going to get a little existential with you today. If you work in your whole life and doing it wrong, I don't know. Maybe you want to. I'm going to share some of the financial part of this.
Yeah.
But there is a very, very emotional hurdle that comes from retirement or getting to retirement. And we were talking about this yesterday. You save your whole life, right? You work 40, 50 years. And now listen, work is a noble thing. I love working. But you feel like you're not going to enjoy yourself. You put all your money away, and then you're 60-something years old, and you're going, wow, now what? I've had all this other time to enjoy life, but did I really do that?
Right.
So I know we tied this into money, and I think it's very cool the way you phrased this. So I wanted you to start, and I was going to add in a little bit about what you were thinking here.
Well,
because I want people to understand as we go through this, retirement is financial, but retirement is so much emotional. It's so much of a reflection on your life and what you're planning to do and what that next life is going to look like.
Right.
So,
there's so many studies out there that have been done that people who have retired, they get older in their age, and they look back and say, well, what are some of the things that they regret? And one of them is living, right?
Yeah.
I mean, living life and experiencing life and travel and doing all the things, because I think sometimes the industry does it to us. We're talking about this. Marketing, advertising of goods and services and all these things
Like
that
it's always
we
trying to-
think we want.
yes, we
Right?
want more
the dream.
stuff. Yes.
Or maybe we're trying to be like somebody else and trying to achieve those goals. And so I just thought about it'd be a good little topic for us
Yeah.
just to kind of sit back and talk about, what is the risk reward of the dream? How much time am I going to have to put in? Am I going to achieve it? One of my mentors, we talked about this on the radio before, is one of my mentors. He's a former CEO of Coca-Cola Foods. And when I opened up this new business, and we can talk about that, how I went from engineering and then totally did a 180, and now I'm in architectural design and interiors.
Yep, so good.
He said there's no guarantees at all when you open a business that it's going to be successful. And that's somewhat the beauty of it, right? Is that if it was guaranteed for everybody, then everybody would do it. And so, but it was a little heartbreaking to hear him say that, because, I'm putting in all this time. I could put in 5 years, 10 years, and still not be able to achieve what I want to achieve after leaving a successful career in oil and gas.
Listen, I get that. I left a company I was with 6 years ago, and I'd have been financially a heck of a lot better off if I stayed. But you talk about the dream, and the dream is more than money. Right. I am much happier now and healthier now. There are other bank accounts that are filled, even though I'm making less and putting more into my business. And I thank myself every day I'm no longer in that cancerous environment.
Right.
So when you look at how to create a dream, working a 9 to 5 every day is something you don't like. That's no dream.
Right.
So, and what studies show is people are chasing their dreams much later in life. At 50 years old and older, that's where a lot of people are actually chasing their dreams.
I'm one.
Me
Let
too.
me raise my hand.
Me too. And,
started 3 years ago.
But what we're doing is sort of representative of what's happening.
But you know what I've been very fortunate. I went to school. In my book, I talk about how I went to school. I basically failed out of college, regrouped.
Yep.
Met a
you
young
had to turn
lady
yourself
who got me
around.
back on track, and then went back and Dean's List, honor roll, president. That's changed. The light switch went on for me. And so that's one of the things that I was fortunate enough, and that's what I'm going to say, is that I've worked hard for my 18 years, that 9 to 5, that 24/7 in oil and gas, traveling so much, and the needs of my business, that it afforded me the opportunity now to chase my dream. And so for me, probably like a lot of others, I'm putting everything. I'm all in.
Yes.
I'm all in for this business.
Right.
But I enjoy it. We can talk about a little bit about when you open a business, taking on the customers that you want to take on, right? How much business do you want to expand? Is that something that's again, the risk reward of happiness? Or you just want to keep, a level playing field and not expand so much that you're getting back into the stress and all the other things that are involved in owning a business?
Right.
And then part of it also too, let me say this, when you get older, you're wiser. I'm much more able to delegate and understand business and trust people and guide people and teach people. It's like I always say when I bring people on that work for me, is that I'm willing to teach them everything that I know about my business, right?
Yes.
And so that they can have the knowledge and slowly gain the experience to be able to take on the responsibility so that I don't have to. And that's part of it, is being able to delegate and have other people do the work for you and your company, So, yeah, I'm one of those that started off and I'm chasing that dream. I didn't leave a nice six-figure income just to make the same amount of money. And for me, it's not really even all about the money. For me, it's just really about the challenge, the accomplishment of being able to achieve something that I set out to do.
Well, again, and help me, Brent.
Okay.
This is what they call an outtake.
Yeah, this is a live stream.
Yeah, and he's
And what we're going to do
Yes.
after the live stream is we're going to chop it up into bite-sized bits.
Oh,
right?
bite-sized
Yeah,
bits.
and so you'll be able to catch the podcast on iTunes, Spotify, all those places. But what we're doing about every 10 minutes or so is we do what in the radio business we call it a reset. Wow. A reset. And the reset goes something like this.
How's it go?
You're listening to the Underbelly Podcast, and if you'd like more information, you can go to realinvestmentadvice.com for all of the links on how you can view and listen to our podcast. And now, back to Richard Rosso with Byron Kidder.
He is the king
He's
of
amazing.
Isn't he the king of the
You
reset?
know what? I mean, he makes it so easy. Okay?
I was lip syncing.
Yeah, I'm telling you, he's a better lip syncer than Taylor Swift. And he's got more hair. No, he doesn't. So you brought up one of my all-time favorite authors, Ryan Holiday, on deciding your why, and deciding that doing something just for the money is a horrible idea. In other words, if you're going into a business thinking that it's just for the money, you will not make the money. It's not that the money's bad, but that goal of making money puts you on what I call, he says treadmill. I say it puts you on in this vacuum where you feel nothing. There's no passion. You've got to love what you do. That's how the money comes.
Yeah.
But to love the money at the end of the objective, the why shouldn't be about the money.
Well, I've said this multiple times on the program. It's just one of my things. Find your passion, because passion will fuel your purpose in life. Mm-hmm. And so when I go out and I speak to all these different groups and real estate agents and all these other people about the 101 common sense rules I like to try to live by, is find your passion. If this is not your passion, then find something else to do. I mean, it's common sense, but it is true. I see people all the time stuck. They don't want to make a change.
Well, why do you think that is?
Scared, insecure, not really sure that they're capable of doing something better. And I think everybody's fully capable of doing something that they want to do, as long as we put the 1,000% of your effort into it, as I like to call it.
I also think they trap themselves into a lifestyle where they have the big mortgage payment,
right,
and they got the car payments and so forth, and they leave themselves very little flexibility. In other words, the money, they may be so unhappy at what they do, they utilize the money to build all this other stuff, like you said earlier, keeping up with everybody. Now I've got all these bills and obligations, and I'm not financially flexible to say, I want to start a business. I want to do something I really love. Well, you know what? We help people all the time to say, well, if you want to do that, here's what you have to do. There's some tough decisions you need to make financially, whether it's to save more money in an emergency reserve for a couple of years, or, in other words, the prep work, because it can be done, but people just surround themselves with some sort of drug in the form of the bigger house and so forth, that they feel is going to make them happy. And then when they realize it doesn't, and they have to go backwards, it's just too much work, as well as the fear.
Absolutely.
As well as
I
the
had
fear.
an aha moment with that, because look, I had my nose to the grinder. I was working hard in oil and gas, achieving my goals that I wanted to do there. I had my own stepping stones. Process engineer out in the field, work my way up into management, coordination, and the senior management, and go into consult. So I would always achieve the goals that I wanted to achieve. So I was focused. But then when I decided to do my own thing, I get it. I understand. I had that money, right, that I had set aside, that I worked so hard for, and I understand how you got it. It's kind of true. I mean, you have to have money, kind of in a sense, to make money. I mean, if you don't have it, all the people who are working every day and they don't have any extra, there's no chance for them to really, and I say, of course there's always a chance, but you know what I'm saying? It's much more difficult to go out and want to start your own business and to follow your passion and to follow your dream. So, I mean, I agree with everything you're saying.
Well, and plus you spent, look at how much time did you spend at your career before you, in oil and gas? How many years?
18.
So you think about all that time.
Plus the 5 or 6
so
in
you
college.
probably did what I did and went, oh my gosh, I spent so many years at this company and I have all this vested. It's, I guess, like even in a relationship you don't think is going well, but you've invested all this time and now you're going to say, I'm going to try something totally different. What happens to all of this? And you've got to find a way to bridge that.
Well, look.
And you did a good job, because you transitioned a lot of your skill set into something you love. But a lot of people would go, gosh, I've got 20 years with this company. I know it's not the best, but it is what it is. And they fall into the status quo and they can't think differently and they get entrapped. And that's a very tough place to leave.
We know this. I like to call it. It's kind of like, as Steve Harvey says, you got to jump.
Yeah.
You got to take that step
Gotta
off
take that
and go.
leap,
But I
yeah.
mean, look, believe me, my father,
Oh, he's
my hero, right?
He's the man.
Kidder
Yeah.
Senior.
Yeah, I love Kidder Senior.
He's old school. He was really reluctant about me doing this because, listen, I'm in this job, I'm in this business now for 5 years. There comes a point at which my credit, my value decreases if ever, probably hopefully never, wanted to go back into the oil and gas business. At what point does somebody say you've been out of the business too long?
Yeah.
Right? So, I mean, it's the gamble.
It is.
Right? So, I mean, I'm all in
Because all of a sudden
on
the door
this.
closes on that old career, even though you have so many years.
Well, I could
This
have stayed in there and
changes
done
so
really
much.
well, but it was a lot of work. In the business that I was in, it was extremely stressful. Here's the other thing I always like to say, and I had this as a bullet point, but, as you work your way up through management, it doesn't really get any easier, does it?
Oh, my
There's
gosh.
more responsibility.
The
There's more
stress of
direct
it.
reports that work for you. You've got a lot more paperwork. There's so much more stress that's involved for what you're getting paid. When I worked in the business that I was in, I had so many multiple companies that would come to me because I felt like I was a leader in the industry in sales and consulting. They offered me so much money to go and work for them. I mean, significant.
Sure.
Somebody even asked me to open up a business with them. Say, hey, listen, you know the business so well. Would you like to open up a business and make you a partner? I was so happy with my job. No stress, working from home, travel, expense account. I mean, I was living the life. And so for me, it was an easy choice. I would rather have a less stress-free life in the job that I was in than taking on another $30,000, $40,000, $50,000 a year to take on a new company, new bosses, new management. What's their style? And so I was very content with where I was and the money that I was making, and just decided that I didn't want to up it any more than that,
But it is a decision, to your point, that many people are making later in life, and or say they take a retirement. There are people that will transition, and we're finding more and more people, even though they should be working longer. Look at Pop Senior, 72 years old, man.
Unbelievable.
He's traveling all over the place working, isn't
Unbelievable. Yeah.
he? He's amazing.
Yeah.
And it keeps him busy. Yeah, it
That's
keeps
the
him
other thing. Well, we
keeps
always
him
talk about
occupied,
that.
Keeps him busy. It's a healthy thing. We saw there are many studies, but the one that's prevalent to me, the one that I remember, is how men will retire at 62, and I think part of the reason is that Social Security is available. And if you look at the mortality rate of those individuals, it increases dramatically.
I was going to tell you about my grandfather, another hero in my life.
Yeah, he was a
Former chief of police of Baton Rouge.
Chief of police.
Was in World War II. Relocated to Baton Rouge to marry the love of his life. Started walking the beat as a cadet in the police department, and worked his way all the way up to becoming police chief, which is an appointed.
Yeah,
you have to be
right.
you have to be appointed and a mayor, and they have to be elected, and so it's difficult to even get there.
Sure.
And he retired at roughly that age, and it was downhill from there for him because he wasn't working, he wasn't staying busy, he wasn't doing the things that he loved to do. And so I think my father looks at that and he probably says, I saw that happen, so I just want to stay busy.
I'm going to avoid that.
Yeah.
Yes.
Yeah.
And retirement is much different today than it was in the past. People are staying busier. Again, you do see these studies about people who do retire early. And then there are the people that retire early and they wind up creating a new job, working some sort of doing some form of consulting. In other words, they still bring money in. And they
Right.
still keep their minds engaged. They have other activities that they like to do, and they're happier than they ever have been. That transition to retirement can be very, very challenging overall.
My observation, I think, where I see people that, if you want to call it failure or whatever it is they take a leap of faith into a business that they may think they have a passion for, or have a slight passion for. It's something that they have no clue about the business itself. Mm-hmm. Open up a coffee shop or a restaurant or something that they may have dreamed about doing, and they get into it because they don't really know anything about the business, and it fails.
It does, and sometimes you'll pass a business. You ever do this? You pass a business and go, who thought that was a good idea,
Right.
and how the heck did you decide to do that?
Absolutely.
And how much homework did you do, and do you realize that you're probably going to run out of cash very soon, and then a month later you pass and it's gone. And
Right.
you feel sad about it.
Right.
overall, because someone is out there trying to chase a dream, but realize, I think they want to live the romance of having their own business and money coming in, but all the work, like just even think about the work going into plain old vanilla, say, coffee shop in your neighborhood. What they have to do to think about, what they have to think about margins and hiring
the
and
people.
And the
That's
right.
a whole
and
area
the whole
of management right there.
satisfaction of creating what experience you're going to create with a coffee shop, right? It's not just, hey, I'll just serve coffee. No, it's so much more, and you better have quite a bit of cash
Right.
on hand because of the burn rate. So we work with a lot of people that want to be entrepreneurs later in life. And believe it or not, they have a lot of money in their IRAs, but they don't have money. And 401ks are not conducive to people that want to create a business, because everything that you take out of that account is taxable and or penalized. Where they don't have a decent emergency reserve, or haven't lowered their expenses enough, or prepared where a spouse is working and bringing income in. So we go through these stages of helping people make sure that they're successful and form a business plan and so forth. And those people have make it. They're not making as much money as they did when they were working at the job that they didn't like, but they are happier. It comes down through much more enriching experience than just money. Why do you think there's a trend now of where people will spend more and get more satisfaction out of experiences versus buying stuff? Like going on a vacation and making a memory versus buying a new car. There's so much more satisfaction in the experience.
Right.
I mean, I think that's, even though we're a consumer society, I think that's a positive trend as opposed to buying junk and stuff, and actually good experiences. Like when we go out for dinner, yeah, we might spend a little bit more money, but it's not the dinner, right? It's
Right.
the
Oh, that's what I
talk,
always
it's the
say.
conversation.
The food should always be
It's
great.
the experience.
It's the experience.
It's the experience. Oh, and by the way, this interview, as well as some incredible, we have got some incredible new articles about the market at realinvestmentadvice.com. So this podcast will be available to you to any place you can get your podcasts. And what we do at Underbelly is we try to tackle subjects, Lance, and we have great guests through the week, but Lance is so much market driven. My goal for Underbelly is to tackle some of those topics that, like this,
Right.
that Lance is like, well, it's not market related as much, even though we talk about the market. So we try to give you a little bit of a different flavor with Underbelly. But listen, you got to listen to the Lance Roberts Show every day, Monday through Thursday at 3 o'clock, our podcast. We're really building an audience there, aren't we, Brent? That's really
We
going
absolutely are. I've seen exponential growth the last several weeks as we have begun to get the content out on the internet. And then we've got our YouTube channel, the Lance Roberts Show, which is a companion channel to Real Investment Advice Pro. So there's lots going on, lots of ways to get a hold of our material. Just go look for it. Look up Lance Roberts or The Underbelly Podcast, where all finer podcasts are sold.
So you did this transition from oil and gas to interior design in a very unique way. Like, you fascinated with me. I have no idea why I like this, but you fascinated me with some of the things that you do
Right.
with interior design. Byron's going to design my 70s house, my Brady Bunch replica.
Yeah.
But I'm going to have areas in the walls where the dogs can run through. So they have all their little cubby holes. I'm going to be that crazy guy.
I mean, I can't wait to build this
Yeah, we're
house.
not that crazy guy.
So you're going to have that 9-window pane with, you'll be in the middle and all the dogs are looking
yeah,
at you.
that's
Yeah,
me.
that's
and
great.
the sunken
We're
living
going to do
room.
the sunken. I'm bringing the sunken in the living room back. Did you know that?
No,
Absolutely.
you are. No. Well, let me just say, I want to have that conversation pit,
Uh-huh. Yeah.
right? And
yeah.
with the shag carpet.
Can we come over and mic it and drop cameras and we'll do the underbelly there.
1,000%.
So
you know what I love
you're
about
not bringing back the sunken
You
living
know what I
room.
love about your
What?
wants. You know what I just meet with clients when I design a home for them.
Yeah.
I talk about the wants and the needs.
Yeah.
Right.
Yeah. Because
But-
there is a difference.
Yes, but I love one of your wants. I think it is. I don't know if it's a need. I may have to talk you out of it.
What?
The carpet in the kitchen.
Yes, I.
Why?
Because it's a 70s thing.
Can I switch to the lime green linoleum? Look at that.
Well, yeah. I'm thinking sanitation.
That's just.
In
I
a
mean,
kitchen,
there's
you know.
a few. That was a little bit of a trend. I think
Listen,
at one point.
I will relent to you on that.
I know we
but
won't
not
do it,
in
but
the
it's fun. It's
conversation
fun to
pit,
think
dude.
about.
That's shag.
Yeah. Totally.
Orange is shag in the conversation pit.
And tinfoil wallpaper?
Well, that's more disco. We're not going there.
This thing's going to be
wood
unbelievable.
paneling. Wood
and
paneling.
we're going to have to, we're going to have some stuff in there with one of your idols.
Of my Johnny Cash, yeah.
Absolutely.
See,
Absolutely. We're going to have like a smoking room or,
Well, the jungle room, like Elvis had.
I miss the 50s kitchens.
Yes.
With the ceramic tile countertops.
Very nice.
or
And
the
splash-
appliances that required more effort to work them.
No,
than to
not that
actually-
part.
So, Byron, let me ask
Just the
you,
look.
are there some elements of, say, the 50s, 60s, and 70s when it comes to house design that you're actually seeing in designs today? I know they're a lot cleaner, sleeker. To me, some of them are very cold designs, but is there any
Yeah,
of
but
that?
you know what? I think that in the 50s when they're doing a lot of those homes, there were a little more open spaces.
Yes.
And then we got into a phase where we were cording off everything.
Yeah.
You had a formal living room, and then you had like a little extra dining room, and everything was so boxed in.
Very much boxed
Now,
in.
when I go into all these homes, I mean, we are opening up homes everywhere. That's all we do is open up homes. On all these older homes that are 70s, 80s, even 90s, we're taking, these engineered wood beams or steel. You saw that post I put where I put that steel beam and opening everything up so that I call it creating an environment where you can actually live in it, where people can actually live.
It's sort of communal.
in the home.
It's communal, isn't it?
Yeah.
It's where everybody can gather.
Absolutely.
It's not that boxy.
Yeah.
Also, I see that with kitchens. Like, there's more of the islands.
I'm
in
getting rid of
kitchen.
breakfast areas.
Okay.
Breakfast areas are gone.
Yeah, really?
Yeah.
Oh, yeah, those little breakfast
Little
areas. We had
side,
the
the
table.
kitchen, you had a little side with the little,
With the little lamp.
chandelier hanging. Yeah,
That's all
That's
gone.
gone. Actually, when I go into a home now, we take it and we utilize that entire space and we create these big, beautiful, awesome islands where everybody can sit.
Because really, a kitchen is like a food laboratory.
Kitchen is the place
a
to
food
be.
workshop.
Yeah.
And you need lots of counter space so you can spread out and
I-
put these recipes together.
Well,
I'm old school,
You know?
but I
You
like
know,
this idea that
but-
Byron does where he takes out that that kitchen nook, the breakfast
Yeah,
nook, and he
yeah.
actually builds
I'm
out
putting
the islands.
kitchens in there and all that, but it's going to be interesting. Let's get back to finance.
Oh, yeah.
All
It's
right.
going to be interesting, and I'll let you elaborate on this,
Mm-hmm.
as to how interest rates as well as all of these tariffs and all these other things are going to affect our cost of goods. Because
Are you seeing an increase in cost of goods, or your builders seeing
a little bit, but not quite.
pressures?
I think it's going to end up get worse. But I mean, we can really do a lot right now with the cost of goods that have been so low over the last 10 years, So it's going to be very interesting to see
It
where
is.
that goes from now. And that's going to take a lot of people out of the market.
It is.
To do, if you can redo a kitchen for 30, 40, 50, whatever the cost might be, and that ends up going up 30, 40%, a lot of people aren't going to be doing that. So then that could totally affect the housing market and other things, obviously.
Well, and you are seeing a softening in housing, and that does concern me, whether it's house price inflation coming down, mortgage rates hitting a psychological speed bump at 5%, and that's pulling people back. So, and to me, housing slowing down is your first sign of an economy slowing down. And I think the market obviously has got a hint of that in the face of a Fed that's going to continue to raise rates.
Didn't you say I don't
So-
want to put you on the spot here, but did you speak to some people who are investors who were saying that they're looking at the 2-3 outlook for the market
To actually liquidate real estate
right?
by next year. So real estate investors saying this is a peak. So that's also a concern. But listen, that's how markets work.
Right.
Real estate markets, stock markets cycle.
Right.
And you will have buyers that are going to be able to come in at lower prices if they're disciplined enough.
Cash.
So that and cash.
And not worry about the borrowing and the interest rates and all that.
Right. But again, we are a very indebted society. Even though households are able to make their debt payments and the quality of mortgages are there, there is now pressure on households because of borrowing costs.
Yeah.
And it's going to start to affect things. But see, the market always looks ahead 4 to 9 months, 6 to 9 months, and sees the writing on the wall. This has been a very major earnings week, and most of the earnings have been disappointed. And if it's not the earnings that have been disappointing, it's the forward guidance. And we're getting the T word now more than we have. We're getting tariffs starting to cause
But do you
issues.
think that's real, or do you think they're just setting it up in case?
Well, I don't know, Mr. Conspiracy Theorist, but I did think of that maybe some companies are using that as an excuse, but they are seeing pricing pressures and issues. And again, it's a case-by-case basis, but it's on some of the bellwether companies overall. So, and again, we are seeing some of the effects of the tax cuts. We're starting to see some of the positive effects of the Tax Cuts and Jobs Act start to dwindle down.
Yeah.
So even though GDP was a good number, it was a good consumer spending number. The issue was business spending. Business spending is way off. So that was a bit disappointing, but it was still a good number. So, but what people don't understand is how could the economy be doing so well and the markets suck? And the reason that is that markets are very dependent on interest rates, and markets are forward-looking mechanisms. So that's why you're going through what you are right now. But I will help everybody understand it's volatility and correction right now, but people are not used to that, Byron. People are not used to stocks going down at all.
Yeah.
There's no latitude in their brains for that. That now markets are going to normalize as the Fed decides whatever normalization is. I'm sort of looking forward to it, but the process itself is going to be a little bit volatile, and it's going to force some people to look in the mirror and go, you know what? I am just not a stock investor.
Right.
I'm just not. I'm not built for it. Even if I get 4%, like the gentleman you talked about, his portfolio's down 7%.
Right.
I will tell you, markets swing 7 to 10% just as a matter, like if you and I breathing. That's normal.
Right.
If you can't handle that, you're in the wrong asset class.
Yeah.
Sorry, but that's the price of admission to buying stocks is volatility. And again, we have this podcast along with a lot of great information at realinvestmentadvice.com. And you'll see excerpts from this podcast. Also, again, some really great articles. One of my favorites is Jesse's about where the market might be going through a topping process. He's got another great Jesse Colombo, contributor to Forbes and one of our analysts. We'll have another great article coming out on Monday. And if you haven't yet, sign up for Lance Roberts' Real Investment Advice newsletter. When you go to realinvestmentadvice.com, sign up there. If you don't, there's a link around Sunday or so. You'll see it there. But otherwise, you'll have that report in your mailbox every Saturday. So we are watching this closely.
I got a question for you.
Yeah.
When we get back to a little bit too.
Yeah, I want to talk about your book.
I'm all about us renegotiating all these trade deals.
Yeah.
But the USMC, as Trump likes to call it, we've heard that. Now, listen, I keep up with the news a lot.
I know you do.
But I haven't done my homework, so I'm putting myself out here. But I haven't really heard a whole lot of specifics with regards to how that has changed from what NAFTA used to be. Have you read anything?
I've read a little bit about.
Is it beneficial?
No,
Are there things that are?
I think some elements of the actual NAFTA or the revisit of that are positive. I think the greatest overhang on the market today is China. It's working out this process with China.
So we're in a holding pattern with them.
Yeah.
Who's going to blink first?
Well, people have been calling it a Cold War, and I don't want to throw that around. I think that's more of more media hype. But we do need to make sure that we're working through that process with them. And, Trump's playing hardball.
Is the China market really down as much as he says it is?
Listen, but GDP was roughly or a little over 6%. For the size of that economy, that's recession. Even though for us 6% would be 6.5% would be gangbusters, right?
Right. Based
on the size of that country, that is recession.
So is that going to bring them to the table?
I don't know. Maybe they'll build. I think what they usually will do is build a few cities that nobody's going to live in. That's how they stimulate. They build stuff, and that's.
But that's you got to pay at some point, don't you?
Yeah.
Unless you're hoping your economy catches up to cover it.
Well, they're always thinking that their consumers are going to spend. Listen, they spend up to a point, but they're not America. We're consumption society. 70% of GDP is consumption. Yeah. That is not how that's not how the Chinese are wired.
Right.
So eventually this is going to cause enough pain that something's going to need to be done. So we'll see. But in the meantime, you have an S&P that's in correction territory. And again, corrections can happen multiple times in a year in real life, not what we went through last year. And that's what people have to understand. If you have a portfolio of even bonds and stocks, you've got to give these portfolios room to move. If a portfolio is down 3% and you're worried, well, then maybe you got to revisit again whether or not you're in the right allocation.
You know what? I know all about revisiting your investments, don't I?
You sure do.
And that
You are a revisitor,
and
yeah.
that you need to revisit your investments at some point and pull the trigger on
You
it one way or
You
the
have
other.
to pull the trigger if it's not working, or give it room to, follow rules, and that's important
Follow them
as well.
and live by them.
Yeah.
Right.
So listen, again, I want to talk 2 more minutes about what you're doing. So you can go into a home and just show somebody virtually, like, I want to go ahead and I want to
with my service.
I want to
Yeah.
renovate, right?
Yeah.
I want to renovate my house, but you can actually create a visual environment of someone, show somebody, well, this is what would happen, right? You can actually create this kind
I
of
call
visual
it empowering the client to get what they want. In the past, a lot of times it was you relied on the builder or even the remodeler, right, in their vision, in the discussions. But then when it starts to get built, it's like, oh no.
That's not what I wanted.
So what we do is
Yeah.
we're on the cutting edge of the technology now with the software that we use to provide virtual 3D reality to our clients. So I will get you in. So if I were to design your home, we're going to come in, we're going to stylize you, we're going to find out exactly what you want. We're going to design it in 3D virtual reality so you can see it on the screen, where I can manipulate the screen, but I can actually now come in and put the 3D virtual goggles on you, stand you in your space, whether it be your current kitchen, let you put the goggles on and actually turn around and look and see your new kitchen as we designed it together. Wow. So it's really hands-on. It's amazing. So now when it gets built, I always tell the clients, you're going to love it, but you've seen it for the last 4 weeks as we designed it. So it's kind of be like, wow, this is awesome. But
So it goes from virtual reality to reality.
and you build it
you don't-
exactly how it looks.
And then it's as opposed to, that's not really what I wanted, and now we may have to spend more money to do a
change it.
redo,
You
right?
have to come to a agreement with the contractor. Usually, it's called a change order, and you're going to end up paying for that. So we take all that out. We come in, we sit down with you, we do the virtual reality, we put the goggles on you. If you don't like the refrigerator where it is, you can change it and you can move it in virtual reality and say, well, what would it look like over here? And then what we do is we follow that up where we actually go with the client and we shop with them and do the material selections.
Why wouldn't I just buy the virtual reality glasses and leave the house alone? Can I
Just walk around with it?
Yeah.
Yeah. Do you want what's the favorite one at the house?
Rosie?
We could put Rosie in it too. She could be following you
Rosie.
around.
Yes. It's all about saving the money.
Listen, this virtual reality stuff is unbelievable. The clients that find us, look, what I do is very hard. It's a niche. So it's very hard to go out and advertise. You can't go out and advertise for every homeowner because not every homeowner is going to be ready to remodel at this time when they have. They do it maybe every 15 years, right? So it's hard for us to go out and advertise that. But the clients who do find us through social media going on, interior.com or just search Byron Kidder, when they find us, say, Byron, this is amazing. I am so happy that I found you. I don't know how anybody could do a remodel without this service. Every single one of them come back and tell us they're very fortunate and they love it, And it's my passion. I love it. I call it changing people's lives through designs, one of our little logos.
He's going to hate my design with that sunken living room. Now, you tell me sunken living rooms are sort of coming back?
No, nobody's doing them. I'm doing them.
You
though.
are doing them?
Absolutely.
You're my hero.
It's cool, right? You want to
That's
create
so
spaces
cool.
that are
It's a-
unique and different, but there's always that fine line of going over too much. And you see it all the time. Look, I go back and I think we used to be in these housing booms. I go back into these homes that were built in the 70s and the 80s. And you walk in and you're like, what were they thinking when they designed this? Like, why is there this closet here? Or why did they do these soffits that are coming down in the bathrooms? Or why did they close in these spaces? I just think when you get into a housing boom, you're just building. You're just churning and burning homes, right? And so sometimes architects and designers aren't involved. They're builders. They just go in and they do these things, or they're just copying designs. And, once you start off with 2 or 3 designs in a subdivision, that's what you have throughout the subdivision. So any home I would go into in a subdivision, you're going to pretty much see it, So, so now we're creating spaces that people love, that they can live in, that they feel good about. And then their value of their home goes up and resale goes up. And it's nice. It makes people happy. Sometimes my clients, I had a client recently, flood victim. They've gone through so much. And then when you go in and you show them their space and you put this one lady, I put the goggles on her to show her space in this home that's like back to the studs. And some of them will actually break down in absolute tears of joy and hope that I'm seeing now for the first time where I'm going to be back to living a normal lifestyle again. And then it's this dream of this brand new house that they're getting, all opened up and everything. It's awesome, man. I mean, what I do is it's really rewarding.
It's very rewarding. How does somebody get a hold of you?
InteriorU.com. InteriorYOU.com. Yeah, or just search Byron Kidder. You'll find me there. It'll come up. So, yeah.
So we also have, Byron's got his book, It's All About Everything, which ironically has nothing to do with interior design. Well, it sort of does.
Tell me.
Inside of you.
Sure.
This is about interior you.
You
get it? You, interior as a person, because it's building the interior you.
Actually, what do you call it? I'll never
return on you.
It's return on you. It's the human capital investment.
Yeah, right. And that's where we're seeing, when we hear all this talk about wage growth, and everybody's so scared in the market, and the Fed is always bringing it up, but when you look at the numbers from median household income, they're barely, and I'm talking about, again, adjusted for inflation, you are barely ahead of where you were in 1999. So I don't know why the Fed is so obsessed that this is going to skyrocket, because it doesn't seem that way to me and us here at Clarity. So if you want to invest in something, not a stock, not a bond, or your 401k or whatever you're doing, it's investing in making your skill set better and better, and standing outside or above the crowd. It's all about everything are those common sense tips that you need to hit that and to grow. And it's available on Amazon. Yeah.
You know, I'd say we all get away from the common sense rules that make us successful in both business and life. We complicate it. There's so much information out there. You go, it just comes down to the basic common sense rules, you know?
But we forget that.
We totally forget.
I mean, we totally forget what makes us us.
Right.
Because we're wrapped up in every day.
Well, you know, with our program with the radio, which we've done, is and it's about human capital investment, as we've said.
Yes.
You earn, average person, college degree, what, $2 million, $2.5 million over a lifetime, which is much larger generally than your retirement that you've invested in. So we always try to tell people you are the greatest investment, a money-making powerhouse machine.
Quantify yourself.
Right.
See how much you're going to make. You might be surprised.
Right.
So, yeah, there are numbers and there are stats that show that wage growth is not there. You have to, unfortunately or fortunately, make the difference in yourself. And the book is really good that way. I suggest people that are younger people just graduating out of college and they need to get a job, use some of those skills during your interview process. Give us one tidbit, just one tidbit out of the book. That's one of your favorites.
It's all about selling yourself first. You know, it's about selling.
But how do I sell myself first without sounding like a jerk, like some pompous how do I sell myself?
I always tell people, just be you.
Just
don't complicate it. Okay. I see it all the time. Look, when I'm in sales, I see it all the time. People trying to oversell.
Okay.
Trying to close the deal. When I was out, I just was myself, man. You know, with relationships, you know how I am. I'm just go out, build a relationship, be honest, be heartwarming.
What you see is what you get.
Really try to provide amazing, best-in-class solutions for your clients, right? You want to do what's right for them. When I would work with clients, I said, listen, it's not about a single sale for me. It's about a lifetime of business with you. Right. So when I approach a sale, it's not about getting that one sale and gone. And I think generally that's what the sales force tries to do. And, I don't like to call it sales. I like to call it consulting, because I think if you're only selling a car or a gadget or, glasses or whatever you're selling, you're doing more than that, or at least you should be. You should be providing amazing, best-in-class service.
Yep.
And you should be selling yourself, because people want to do business with people that they like. Right.
And can you tell? You can meet with a salesperson or someone that you meet with, and you can tell right away. Someone who really cares, you feel it.
Right.
You can't fake that stuff.
No.
You just cannot.
Right.
People will know whether you care or not.
Right.
And I don't know how that grows, if that's just because you're an empathetic person, or it's how you were brought up, or life experience. But there are people that sell stuff and they're not successful because their heart isn't in it. They're just in it. What did we say earlier? If you're doing something just for the money, it is a bad idea and you're not going to make any money.
Right.
If you're in it to help and make sure that you care about that individual or that family or whoever it is you're selling to, it's a whole different world.
Right.
It's a whole different world.
So it's funny you asked that. I am doing, if anybody wants to just research me, Byron Kidder, I've got my YouTube videos where I just talk about some of the rules on my book.
I will tell you, your
like
YouTube videos, they're very short, but they're very motivational. I know you sent me one yesterday, but my eyes were glazing over after 14 hours of work. But he's very, he's got a gift for that. Like Tony Robbins, but Tony Robbins is always a little, to me, like a little bit, not disingenuous, but something about him, I don't know, I'm not buying into. Yeah. You are like, your heart is right there. And the videos are so positive.
Yeah,
so
I do
good.
go out and I speak to groups.
Yeah.
So if anybody wants to give me a call or anything like that, we go
schools, real estate.
Schools. I've been speaking to alternative kids who may be struggling in high school, real estate agents, other businesses. I go. It doesn't matter if it's people of 5, people of 50. It doesn't really matter. We go in and we really get people back to the basics of doing what's best for the company and for their life, right? About the power of saying thank you, all these other things. The one tidbit, I'm doing a little YouTube video right now.
Okay.
Because people always ask me that question. What is one simple thing that I could do to immediately start to become successful in business?
Okay.
And it is being fast in every single thing that you do. I call it being fastidious. Just simply being faster than everybody else. Your best friend is procrastination when it comes to your competitors. So I always tell people, if somebody sends you a text, answer it before they can put the phone back down. You get an email, reply received. I mean, be fast because it's the easiest differentiator that there is between you and your competition. It just requires a little bit of effort.
Listen, we're not perfect here at Clarity, but one of the mandates that I have is that we get back to people almost right away. Lance sets the pace for that, and I think I do too. Unless we get so many emails, sometimes I'll miss some, and people have to say, "Hey, Rich, what's the answer to this? You didn't answer me." And I'm like, "Oh my gosh," because the emails scroll so quickly. But we do pride ourselves of always being there. Like I have an appointment tonight at 6:00, and I'm here because the market's not too good, and that's what we do. So to your point, be fast, be different, set yourself apart. It takes a little bit extra work, but I will tell you, in the long run, it's not only the money; it'll make you feel good.
Yeah. But it doesn't require nothing but effort.
Little effort.
Now, what I tell people is be fast, but provide quality information and results.
Quality, not fast and junk.
The other thing is, learn to under-promise and over-deliver. Be realistic in what your expectations are, but always over-deliver. So when you promise somebody something or a date, beat it. Just those simple things. I always say, beat your clients to the punch, meaning never let them have to reach out to you for updates or to call you to find out where things are. If you know your client, you know what to do. You know that they're going to be looking for a phone call. So just pick up the phone and call them.
How much content we provide every day and send You better be fast, but don't be furious. Great movies, but don't be fast and furious. Well, gosh, boy, we really are. I have some other stuff I wanted to talk to you guys about, but we will leave that to next week. Now, next week, we got a real surprise with savingforcollege.com, right? And talking about the FAFSA and what to do to, not leave some money on the table when it comes to college funding. And one of the best sites out there and resources, savingforcollege.com. So thank you so much for joining us at Underbelly. It's such an honor to be here with you. And we'll see you again next week.